Thank you for coming to check out another episode of the Stashcast, where we have interesting conversations with interesting people focused around the world of commercial real estate and prop tech. The Stashcast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? You can with Needle. Come check it out at Needle, NEDL.us to learn more. All right, great. I'm excited. We have Sunny Juneja with us. He's the founder and CEO of Canopy Analytics. Sunny, thank you so much, man. Appreciate you taking some time.
And thanks for having me. Fan of the pod, so glad to be here.
Love it. Awesome. So I was listening to somebody else's podcast when I first heard about what you're up to. And I remember very specifically because I'm doing this redevelopment deal and I was moving plywood from one part of the first floor to the other so that we could get the stairs put in. And I was sweating and just working hard, but I was listening to what you're doing and I was fascinated. So maybe if you could give us an overview of what Canopy Analytics is doing, and then we can continue to roll from there.
Yeah, I think where I got my start in real estate is I started a company like a decade ago that was in help people avoid foreclosure during GFC. And since then, I've always been really excited about real estate and technology. I think there's a great white space there. And so a couple years ago, I was like, I feel like everyone's a renter, I'm a young person. People have complaints about their property manager. Like, what are some problems and opportunities there? And so I interviewed maybe 100 plus asset managers in the multifamily space. And I think what really surprised me was that how many of them were doing things so manually and how many of them were getting like literal gray hair on their head from the amount of stress they felt because they're constantly looking for problems. And it really shocked me that these people are managing 40, $50 million buildings and maybe a half dozen buildings or a dozen buildings. And they just constantly 1.5 months later were looking for figure out what happened to their property. And to me, that was like a really interesting kind of problem to want to solve. And so we embedded ourselves with a developer for a year and a half, worked out of their office every single day. And what we came up with Canopy was that we would take all your data, historical, current, whatever. We would analyze it, do the same things an asset manager would do using AI, asking, is this a controllable expense? Is this non-controllable? Is it unusual month over month, quarter over quarter, year over year? And we do that for all your real estate KPIs all at the same time and create these tasks and alerts and reporting that would do the asset management for you. And pretty happy with where that landed. We're at a little over 100,000 units. We integrate with 2 million units. We work with 15 of the largest 25 management companies. Been on a trajectory.
That's awesome, man. So how do you do that? Um,
It's been really complicated. Just breaking down the problem into multiple parts. I think the first part of the problem is just getting the data. Most people are using Yardi or RealPage or some sort of property management system. And if you're a asset manager or an analyst or even a property manager, your best bet is to get reports, right? And then to copy and paste something out of those reports into another report that's like a template, right? So the first challenge we really faced, and it was really hard, was really integrating with those systems. Like I would say we're the most integrated with all the property management systems. We have fewer integrations as a result, but like each one is much deeper. And so getting the data was its own first problem, right? Second problem was like, how do you recreate these property management systems data? That was also really hard. Like every system has a different definition for occupancy, which should be the most brain dead concept. How you measure delinquency, how you measure like what a new prospect is. There's all these nuances that turns out. And so we end up having to build a system that is like its own property management system and convert all the data into the same sort of format. And
hmm.
then learning to analyze it and do the analytics and the kind of machine learning. Thankfully, I went to school for that stuff. That part was hard, but it wasn't like I knew nothing about multifamily real estate and had to learn it all. That was a little bit more there. But I think the key thing we did was really being able to get all their data and really get it in a very raw format to look at it every single piece and then be able to generate it into the KPIs people thought. And then
Right.
learning from asset managers, I would say every one of our customers has had a major impact on us and our roadmap and our understanding and just listening to hear what they have to do. Going through the 40 questions, 50 questions, working out of their office to see it and just being able to replicate that with software has been really advantageous.
What do you mean the different questions? Is
I
that around how preserving occupancy and keeping tenants happy, things like that?
I think if you're an asset manager, your job is to be like a detective and it's to figure out if there's smoke, if there's a fire, and really drill into that because there's 1,000 things that are going on at your properties that you don't know about. They're all in different places, they're all managed by different management companies, and that there's a lot of information to snuff out there. And so I think a lot of asset managers have developed these processes, which are all similar, where they like say, okay, I want you to fill out this manual report, or I want this thing to look like this. And then they act like detectives and they get on a weekly or monthly call and they like ask a lot of follow-up questions. And I think what they're trying to snuff out is there something here that I need to focus on? And for us, just talking about financials, right? So we built this system that can generate your financials in real time before the books close. So I literally can tell you exactly what you spent the day after you spent it. Okay. And I can tie it to your GL, everything. And if you're an asset manager, maybe at the end of the month, you get a 300-page GL and you pick out like some suspect, like whatever transaction, maybe, right? Like if you have time that month or whatever. Okay. What I do with software instead is it's really good at repeatable questions and repeatable processes. So every time I analyze an invoice, I ask three things. I say, is this have a purchase order or not? All right. Is this, if it has a purchase order, is it the expected amount we expected on the purchase order? Is this in a ledger that it's supposed to be like? Is this unusual month over month, year over year, quarter over quarter? Have we spent this much money with a lender before? Is it a controllable ledger or not? And finally, does this impact the budget in a material way? If we've already spent 40% of our budget and this is going to take us now above our budget expectations, like it's very likely to be the culprit of why we had a variance. And then creating an alert to notify someone to investigate that, like that is a really powerful process because instead of waiting to look at your data, you have
Yeah,
someone
you're
else say, here's the fire, here's the smoke.
45, 60 days in arrears sometimes.
Yeah, it's crazy, especially if you use third party management and you don't have control over the systems, it can be very delayed.
That's phenomenal. So you so the first part is really just understanding each one of the systems that you're integrated in. And then once you understand and clean the definitions of what's occupancy, for instance, you're then standardizing the data to then be able to, you have a dashboard that you have. I haven't seen a demo of your product, so I
We'll have to
apologize for
get you
that.
on one later,
Yeah, I'd love to.
to do that. Yeah, so you do the data cleanup, you do that, and then the natural thing is you have to do reporting, right? Everybody does reporting, they hate doing it. So doing the reporting the way they want to see it is a critical process. But the part that I'm most excited about are like the things that happen as the result of the reporting, right? If you click on a number, it tells you like, hey, these are the vacant units that are not ready. Or if you click on a number, it tells you like, hey, here's the renewals that haven't been processed, even though they're 3 months old. And so it's like a work. I'm not sure your audience is going to know this, but I would say it should feel a little bit like a BI system like Tableau, but it also feels like a project management system like Monday.com at the same time. It's a beautiful baby, even though it's very strange.
That's amazing. That's great. What are some of the most interesting things that you and your clients and the firm have found in doing these reports and analytics? Is it as simple as, hey, your water is leaking and you should go figure it out? Or
I think like I'll focus on the interesting part. I think one thing that's interesting is that everybody says they do things different and they do, but they don't. Like at the end of the day, owning an apartment is filling it, making sure you keep your costs low, make your residents happy, make them renew, that kind of stuff. So I think that part has been a little bit like call it interesting is that I really thought it would be significantly different, but like the kind of minutia is that like how companies think about if you're a long-term owner and you're maximizing say like cash flow and occupancy and you have very low debt, it's a very different business plan than if you are a private equity fund where you're doing a value add strategy and like your goal is like to create value in a very short period of time and try to capitalize on that value and sell it to maybe a long-term holder like an insurance company. So it's like it's a very different strategy. And those things like how you define your metrics, how you think about it, that's been very interesting. And in terms of insights from the data that have been universal and maybe surprising to me, is the impact of local regulations on a building and its cost structure.
sure.
I'm based in California. One thing that's, unusual is we have Prop 13. So taxes are not really an issue. You can perfectly budget them every year. There's no appeal process. Your appraisal goes up 2% a year. So whereas another company, if you own real estate somewhere else, like you're constantly pushing your appraisals. You're like trying to get your comps, you're trying to minimize the tax burden. But at the same time, like in California, like you have these maintenance and capex projects that are constantly coming down the road for fire life and safety. In San Francisco, they recently passed a law where you had to have, call it sprinklers installed in every unit or something. And most companies had to
Oh my
redo their entire
gosh.
electrical. I know it's crazy, right? It's not a surprise to anyone who owns real estate that owning San Francisco real estate's hard and it's complicated, but it's interesting to see these kind of like variations. And another thing is if you own buildings where the weather is going to be have a dramatic impact, like just having reserves and being able to capitalize on that. And so it's been fascinating for me at least.
So you said you went to school for AI and machine learning. How did you decide to pursue, I guess we talked about a little bit the problems in real estate, but
I'll start it out here. So my first company, it really fell in my lap. I had an internship. The economy was terrible, so the internship wasn't working. We were doing like hedge fund consulting, and it was like, this business isn't like really. There's not a lot of hedge funds right now. Okay, like they got blown up, and I got connected through that person to another person who was hiring for a real estate play, and I was like, whatever, I need a job, I need an internship, right? And I always thought I would be in finance or some sort of like technical part of it, but we were in the finance part of single family and we were helping people stay in their home and negotiating with banks on like interest rates and maybe fee reduction or principal reduction or whatever we could get or just short sailing if that was the best opportunity. And
right.
then I've always been a technical person and I had a degree in econ. I want to do a PhD, so I studied applied math, and in applied math you do a lot of machine learning and AI stuff. And I had the opportunity, like, hey, do you want to stay in real estate or do you want to go in tech? And I was like, I want to do both. And so I got lucky that I fell in that experience, but it really made me think that the world of real estate is single family, not like commercial. And it was interesting to go from single family to commercial just because the problems are different. The people who are enacting it are much more sophisticated, and there's just like maybe a bigger need for technology, if you will.
Yeah, there definitely is. I'm curious, and maybe we can continue to, I want to hear about your journey from more from initial concept of idea to building the product. How did you get involved with the developer? How did they let you into their office? And then I guess some of the advice that you'd have along the way with that. And maybe we could explore that a little bit.
Yeah, for sure. Full honesty here. My first idea was a single family property management company. And I didn't know what I was trying to do was compete with Mind and Poplar Homes and all this stuff, but I was trying to follow the single family track. And you're always looking for, I had built a company before that didn't do very well in between my first company and then this one. And I felt like I didn't do a good job of understanding the customer. So I over indexed on wanting to understand the customer. And so before I even wrote one line of code or come up with a concept, I just try to meet people who owned one or two rental units, and I just could not get their attention. I went to Bigger Pockets. I was going to these real estate mentor mind networking things, right?
Right.
And people didn't care. The problems were just much bigger than, hey, how do I make the property management better at these 4 units I own? I'm trying to make my mortgage, like I'm trying to like keep my day job. Some people wanted to alternate out that. And once I met someone, I think her name was Deetra. She owned like maybe 90 units, and I could not get her off the phone. And that's when I felt like, hey, the single family property management thing isn't a thing, but if you own more units, you're gonna have more problems. It's stupid and obvious in hindsight, but that wasn't the market I was first going after, right? And so I kept on that same sort of thread. And once again, I knew nothing. I didn't even know the word multifamily existed. But it's a very like to be a complete fool of real estate.
It's very industry
And
specific.
yeah, it's a very industry specific term. And so I found this idea of an asset manager. And then I literally went to LinkedIn, searched for the word asset manager in apartments or multifamily, and cold emailed like maybe 50 to 60 at first. I think we cold emailed a lot more than we cold emailed like hundreds, but maybe 50 or 60 people met with us. And that was really nice. I'm very grateful. There were people from Starward, there were people from small family offices, there were people who were like, people who call it graduated bigger pockets, and they told me the perspective. And then once we had a good concept of the problem and what people wanted to see solved, that was when we decided we're going to build a prototype. Once again, I'm over indexing on trying to validate the idea here because I was burned on my last company. And so what I did is we just made a prototype with images. And at the time, we used some very cutting edge technology. So it was very interactive and you could click on it and it felt real. And me and my co-founder, who's my wife, Jessica, we literally, it looked like, have you ever seen that meme of It's Always Sunny where you got Charlie and he's like pointing at everything and there's like red
Yeah.
circles and pointing? That was our office. And it
Yeah.
was like, asset managers think this, and this is what they think of property managers, and blah, 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 blah. And here's all the problems, and like trying to deduce it. And then we went through a process of distilling that into a very simple product. Call it like one page, five dashboards. Okay.
Hmm.
And then we went to another person and said, hey, what do you think of this? And then they said, this is trash. This is way too simple. We said, what would you change about it? And then they said, okay, here's all the things we would change. And we did that like another 50, 60 times. And we would like completely paint over these interviews where people would say these things and we try to pay attention to it and try to build a product that'd be useful to people. And so then we got through the 100 between the first 50 that like just told us about the market and the next 50 that like completely tore apart a prototype until people are like, hey, this is cool. Does this exist? Can I have it? And the conventional wisdom in Silicon Valley is that you need to validate your price and validate the value and push people to pay for a product that doesn't exist. And the average real estate person is going to be like, I'm not paying for shit that doesn't exist. Hopefully, this isn't, you can bleep that out in the post credits here, but and they just looked at me like I was crazy. And I was like, okay, this is not a strategy. This is not going to work in this industry. These are very risk adverse, serious people managing a lot of money. Like they did me a big favor by just letting me in their office. And so I shot my shot. And the end of one of these interviews, I was like, hey, if this product was free, would you use it? She's like, hell yes, I would. And I was like, would you let me build my product with your data? And she's, oh my God, yes. And I was like, okay, cool. And so that's why we got housed up there. And I can tell you about that process too. It was its own thing. That's just the story of how we got started.
That's awesome. I do want to hear about that. I also want to hear how has it been working with your wife because my wife and I, we love each other very much, but I don't think we could work together.
People always wonder like what it's like, and I would say the pillow talk is really boring. You know what I mean? You're always talking about the company at all times, morning, day, and night. It's like having a kid and a dog that like gives you all your money. And so it's a really strange combination of things. But I really enjoyed it. I think Jessica and I are unique in the sense that we spend like 24/7 together and we both don't mind it. So that's pretty special. I have to say it's been nice. We have complementary skills. Like I'm very technical. She's very empathetic and person driven.
Hmm.
So she did the design of the product, and I think a lot of our customers are a little less tech savvy. And she is tech savvy, but she understands what it feels like not to be tech savvy. And so she's been very critical on building and designing the product. And I was very critical in the early days of building it.
Hmm. So, how did that process in that initial either owner or developer's office, how did that work out? How did that go?
Shout out to Terry Day and Hall Equities Group.
Shout out Terry Day.
Yeah, shout out Terry Day for sure. Really made the company. I owe her a big one. We first, once again, the goal here is to like take your idea and really reduce it to its most basic thing and to test every assumption you have along the way, right? Like a lot of people, you just want to build something out the door. And so we came into every customer interview saying, pretend we know nothing. We would try not to ask any leading questions. We wanted people to say the same thing again and again, and we asked more complex questions. That's how we knew we validated the problem, right? And then with a prototype, we were getting more open-ended feedback and whatnot, but we wanted to go back to the test of the assumption. So instead of saying we built a super complicated prototype that has all these 50 features, bells and whistles, I was like, let's distill this in the most basic thing. What's the one feature in this product that you would use today? And how could I make it as simple as possible and replace something you're already doing? Because like one of the things that's unique about our product is that it's used by so many different people at so many different levels. So your leasing consultant to your CEO are using it, and you just it has to work for both of them. And
Hmm.
so the very first version of Canopy was one spreadsheet that they filled out manually that was automatically filled out and had a place for them to add a narrative. Okay. And we would send it out on Friday morning. They liked that they didn't have to do it manually. That was great. Okay. And we did a super complicated spreadsheet. And then we tested a bunch of assumptions about what did and didn't work. And it really reduced the cost of development to a very low amount because like you can say, hey, this didn't work without having to build out a whole feature. And it was
Yeah.
much faster to iterate using this kind of this. And so the first thing is we turned that into a simple product on the web. And then the second piece was like, hey, let's add another feature. Let's try that out. Let's make sure it works well. And slowly but surely, we took the product we had, we deconstructed it, and we built it one feature at a time, driven by the feedback of the customer and what they felt would have the biggest impact in that moment. And it's been very incredible to go through that experience because we had the advantage of having a strong opinion about what it should look like and what it should be based on our customer interviews. But we also had the flexibility of hearing the customer's live feedback and not over dedicating. Like one thing that was really important to me is right after they agreed to work with us, I wanted to give them something useful within 24 hours. And there's no way you can build a whole product in 24 hours. And so constantly focusing on how do I deliver the new iterative value and reduce it to the simplest form was very critical for that process. And shout out to them for really being open to doing this kind of weird concept of product development with another company.
Fascinating. So in the feedback sessions, were those a lot of phone calls? Were they obviously you're maybe in their offices, but like how were they pop-ups in the application? Like how did that work?
This was pre-Zoom. This was like
Right.
a little bit like, oh, maybe Zoom was around, but I didn't know about it. Okay. So there was a lot of going to their office, doing a demo, and then making it accessible on the web so they could click around on themselves. I
Hmm.
think that was really important. I think them seeing it with their own data and then being able to click around on their own has
Right.
been two things that has been really valuable because when you look at someone else's data, it's not personal. But if I say, hey, this apartment is totally chunking it and here's why, you're like, no, it's not. And then you're like, wait, oh no, it is actually chunking it. Oh God, what do we do about this? And I think using real data and using something that they could actually play with that felt real and was personal to them was a really valuable part of this experience. And I would always say there's always the magic, right? There's always like the little elf behind the curtain, like pulling the strings, like a Alice in Wonderland thing. And you have to get creative. So like different points, we had different ways of doing that. So the very first version of the spreadsheets, like I confession, I manually made them myself. Confession number two was like, hey, when we built the first version of the app, it could only work for one company. There wasn't multi-tenant data, there was no nothing. And then confession, there's all these things you have to do. But I think one thing people do when they're building a product is they try to make it so hard to add, here's your jewelry, here's your makeup, here's all the things that make this thing beautiful. But really, you want to start off with something that has the most basic, the simplest thing that is beautiful to somebody, right? What is the absolute simplest thing, the easiest thing to build that can be useful to somebody? And there's this saying in Silicon Valley is if you're not embarrassed by your first version, you didn't launch early enough. And I think that we really took that to heart. And also pragmatically, if you want to build like an enterprise software where you charge a lot of money, like it has to do a lot of good stuff that's really valuable and it takes time to do that. And so you have to constantly like point against, hey, is this delivering enough value and what is simple? And products shouldn't stay static. They should be dynamic. They should grow with your customer base and your how you sophisticate as a company, your own knowledge. It should be a reflection of your thoughts on the market. And so it's always been about making it better, but starting with something simple.
Hmm. I love that. That's awesome. So speaking of Silicon Valley, you're out on the West Coast. I'm in Cincinnati. How has your journey been in courting capital, investors, raising capital, things like that, if you care to share?
I always knew I wanted to be an entrepreneur. I didn't know I wanted to be a tech entrepreneur since I was a kid. And so I've always tried to set up my life that way. And I didn't know anyone in the Bay Area, but I just moved there for college because I was like, hey, that's where people go and do stuff. And then I stayed there for almost 10 years, 13 years. And I just moved to Los Angeles now, back to my hometown with my family. And a lot of times, I would say the customer development process and the fundraising process are very similar in the sense that you have to do a lot of cold emailing. A lot of people say, "Oh, you need a warm intro." And I think that's true to some extent, but it's not really true. So, for example, the first thing I did is I went and took my pitch deck that sucked and got feedback from friends. Okay. And I said, who do you think I should talk to make this better? Okay. Repeated the same sort of customer development process. It became like a hammer to my worlds of nails. Okay.
Hmm.
And I would say we probably spent a lot of time on our pitch deck to really nail our story. And even at the end of it, sucked. Not knowing your market as well as someone who's worked in it for 20 years and trying to figure it out from an outsider has always been hard. For our seed round, or I would say our pre seed round, we pitched something like almost 90 investors and it was hard. Every pitch, you're yes or no, shut up or put up. And we didn't really know anyone in Silicon Valley. We didn't have an experience there. And so constantly networking, asking people for introductions, asking who they should do it, writing cold emails, writing very personalized cold emails. I was doing like 5, 6 pitches a day in a sweaty room over Zoom. At this point, Zoom did exist when
Yeah.
we were fundraising. And it was like right in the beginning of COVID is when we started fundraising. The business really started to be like a real thing. And I remember like capital was pretty closed off. And so the experience of fundraising during that was just hard. I told my co-founders like, hey, you're on your own. Like I need to put 100% of my attention on this. And you're constantly iterating your story, your deck, your pitch. And I think that was really important. And at the end, we did have a successful outcome, which was awesome. We had our round raised at exact valuation, the terms we wanted from a really great strategic investor who I can't share, but like someone everybody knows that is really big in real estate and technology. And we also have Zane Jaffer, who I think is the podcast you're mentioning, and his name is
Yeah.
Bluefield. And he wrote our initial term sheet, and we wanted to keep him involved even with our strategic partners, and he's been a great partner. And honestly, building a company for me, it's been a real opportunity of learning. Just there's been so many hard things along the way.
Interesting. So did you have revenue at that point?
We had essentially closed our first customer that was paying us ever.
Okay.
And then we got our second customer that agreed to pay us if we delivered this feature set. And I think that was something like 70, $80,000 worth of revenue reoccurring per year between the two of those. And having revenue, I think when we started fundraising, we either didn't have revenue or we just closed it. And then adding like and doubling our revenue, like between pitching people helped a lot.
Yeah. Yeah. We're pre-revenue at this point. We're soft launch in August and full market launch in September. And it's been like, I feel like it's been like banging my head against the wall, talking to a lot of people. So we're in our pre-seed with friends and family predominantly. It's all right. We've got enough in the bank for a runway. Tech is expensive. You know, it's not cheap for sure.
I'm not sure if everyone can see me do this because they may be hearing me, but I'm nodding
Yeah.
very aggressively.
Yeah. Um, and you touched on it a little bit earlier, but you and I, what you're doing and what I'm doing, we're both approaching real estate trying to solve a similar thing. And so the question is, you're trying to help property owners maximize their operations. And what my goal is to help brokers and owners and acquisition people go out and find deals first by using the analytics. I started in brokerage. My first role was in like 2008. And I've seen the data landscape evolve significantly over that time. But from your perspective, why do you think commercial real estate in general has been so slow to adopt new technology?
It's interesting. It's a question I ask myself every day, to be honest with you, because I think having an honest, true answer to this is really valuable. And I think there's a couple of compounding factors. One is like real estate is like a $15 trillion industry worldwide or something, or maybe US only. I don't even know. But like it's this ginormous dollar amount, but so much of it's locked up in illiquid assets, right? Call it like 90%. So it's not an industry that generates a lot of meaningful, call it, I don't want to say cash flow. That's not exactly the right term, but like a lot of
Pots,
the
big
value.
pots.
Yeah, exactly. It's a hits business. You get your hit in and then you wait 7 years and maybe you pull it out.
Yeah.
And so there's like very low liquidity. So the budgeting is different. And then the other thing is, I think one thing I've noticed among my peer group of call it prop tech entrepreneurs is like there's two kinds of people. There's the stash, who's the guy who's been in it, who understands it, who understands the problem really well. And then there's the tech guy who came into it, who doesn't know anything and is trying to figure it out. And in both cases, it's super hard, right? Like
Mhm.
for me to figure out the business part of this is not simple. Like I would say I feel comfortable today. Like you could throw me in a company and I could be a VP of asset management, but by God, that took a lot of like beatings to figure out. And it took a lot longer than I expected to really learn. And I will say definitively there's so much more for me to learn. And same as you, now you have to be a prop tech CEO and you have to be able to fundraise, you have to be able to, pitch, you have to do sales. And like a lot of your broker background is helpful, but it's still your fish out of water, right? There's just things that are going to
Yeah.
be different there. And so I think the companies are very hard to build that are successful because you need to have a really great cross section. And I think one thing that's also true is a lot of people say their industry is behind the times, and a lot of industries are really behind the times. The transformation is slow, but I think this sort of locked amount of value and then the budgeting that goes with it because of that, it's just a big factor. And the fact that so many people get into real estate accidentally, like if you ask someone how they got into real estate, it's I leased apartments when I was in college. And I just stuck with it for 40 years. And now that the industry has grown a lot, that's not going to be the norm. And we have to figure out how to get more people in the industry. So it's just been interesting challenges all along the way.
Yeah. Yeah, exactly. To
And
your
what do you
point.
think, Stash? Do you agree or do you disagree on that assessment? I'm always curious.
So from my seat, when I first got started brokering, I was still getting financials in rent roll and T12 or financial statements either by fax or just Schedule E tax returns of owners. Here it is. Give me a valuation. So why do I think real estate has been slow to adopt technology? I think you're right with the budgeting. A lot. If you look at a P&L, a T12 income and expense statement, at least in my markets, you'd be shocked how much goes to taxes, insurance, and then the margins are not super fat. And so you categorize them earlier. You have the owners who buy and hold forever or build and hold forever and never sell. And so they are on a very different trajectory. But even then, when you're buying and holding or building and holding, your first few years are slimmer. But then you also have the value add guys and girls, but guys predominantly, and they're coming in and trying to figure out the renovations that are going to drive the most rental rate increases that they can. And they're not really focused on, it's mostly feel, I think, is what it's been. And then from my seat, so that's the ownership groups and why they've been slow. From my seat, there are a couple of players in the data market and they're not cheap. So there's a barrier to entry. And from the cost perspective, and the data from those has been increasing in quality, but for a long time it was trash. Like you couldn't rely on it. Like you couldn't rely on rents from, I will leave them unnamed, but their logo looks like a star for the longest time. And then they made an acquisition and it's better. But, and I think that there's like a hangover effect of it was trash 3 years ago or 4 years, whenever I tried it last. And so it's still trash now, even if it is actually better. So I think that from my perspective, that's what it is. It was the poor quality that was initially offered. And then I'm not, and there's also I think a lot of, if it's not broke, don't fix it sort of thing.
Yeah.
So
If you don't mind, I want to just expand on that point. Something I forgot that I wanted to
yeah,
say here on the if it's not broke, don't fix it. I think one thing that real estate has really benefited from is our society has grown and land has become more valuable and urban areas has become more valuable. And there's been this natural appreciation of real estate. And then also we had this low interest environment. So there was really big opportunities looking for yield everywhere. And so you had this huge, like multiple call it like valuation bubbles without saying the word bubble, like it's not really a bubble, but call it like valuation growth drivers that
yeah.
happened. And I think one thing about your point about if it's not broke, don't fix it is like, why should people adopt technology if they're already making more money than they can count? And I think there
Yeah.
was this natural consolidation from like 2006 to modern times where I think the amount of individual owners of commercial real estate is like, it went from 60 to 65%. It's like down to under 10%. It's just like so much. I'm sure you're experiencing this as a broker. Like the more you cold call, it's less often that Joe Schmo is picking up the phone. It's more the sort of sharp private equity guy now. So
Yeah.
there are these kind of two natural things. So I think one thing that we benefited a lot as a business is like the more professional owners that have entered the market and care, like they care about making money. They need to execute a strategy. They're willing to put up money to make themselves more successful. It's really helped our own business grow. And I think that's one thing that's different now.
hmm Yeah, when I first got in, I remember some sayings that were bestowed upon me. The reasons that owners sell are you have two different ones. You have the three Ds, which are death, partnership dissolution, and divorce, or the five T's, which are tenants, trash, turnover, teenagers, and toilets. And while those things still persist with the mom and pops, they're much. Sh I was showing a property Monday, I think. And the owner was talking about, yeah, we've been on this software platform and it's been dead for 10 years. Like the company went out of business, but it still worked for us. And we get his financials and you can't work with them. They're like you had to manually rekey all 120 units of it. And oh my gosh. So yeah, and but a lot of those owners are going out. They're going out of business for various reasons.
Or they're just counting their money on their new yachts.
Yeah, exactly. Who are some of those other prop tech entrepreneurs that you were mentioning that maybe you hold in high esteem?
I'll just go ahead and say that Ganon Yardi, obviously, he's a product we integrate with and whatever.
Yeah.
But here's a guy who made a software 2 years before Windows came out.
hmm
And so the staying power and the rumored revenue they have is insane. And the fact that they're a global business that has, call it real scale, like at a real tech level, is pretty impressive. So that's like the super, super. But I think the more modern prop tech entrepreneurs that I really admire, I'd say Roland from Stake. He's a great guy. He's trying to bring affordability to the market. He's giving cash back to renters. I think that's a very like it's controversial. I think but the evidence is there. It seems like it's working really well. And another friend of mine is Austin Lowe from Peak, and he's trying to bring e-commerce to real estate, where it should feel like the same way as you shop for Amazon for something, it should feel like that in apartments, and giving that to ownership groups and property managers, where it's more than just a self-guided tour or a 3D tour. It's the entire online experience. And I think the people I admire are the people that are not just trying to build the company that flip it into the next one. I think there's a lot of that in real estate because of the TAM and the challenge and how hard it is to run a company. But I think in order to build something enduring, it's very challenging and it requires you to be a little crazy. And I think we were a little crazy when we said, hey, you don't need business intelligence. You need something that tells you what to do. And now it's called AI and it's a little bit more popular. But at the time, I think people didn't understand what we were doing. And it took a lot of educating and getting people out there. So I really admire the people who are trying to do something where everyone turns around and says, that doesn't really make any sense.
Hmm. What do you, from your perspective, what do you see as the future of prop tech and like where are we headed?
I think one thing is there is going to be a natural culling. We definitely had a extreme bull market in technology that prop tech benefited from and real estate. And I do think that the number of vendors we have is probably too much, so you should see more consolidation. I think capital raising is higher. There's just like a natural culling of tech companies. And I think the thing about vertical software, which is for any industry, is it tends to be like an oligopoly, meaning like there are a couple of natural large players, and then there's a bunch of call it like long tail companies that are medium successful. But I think that one thing that's real is there's a hunger and desire for technology. It's no longer a fringe topic. It's part of our everyday life everywhere. And people's expectations and new generations coming in, I'm very bullish on the idea that like AI and technology and real estate will be very interlinked. I do think a lot of the value is going to accrue to the incumbents, but I do think companies like mine and yours and the other ones that are paving the way have this real opportunity to grab the championship belt and take it for themselves.
Hmm.
I think that's pretty natural, but my experience is just that everyone is trying to deploy meaningful technology and make a difference in their business. But it's also hard because the total addressable market, what we call TAM in tech, I don't know if your audience follows this, is it sometimes feels hard. There's about, I think, 10,000 property managers in the US or something like that kind of fit this commercial enterprise market. And you have to capture a large majority of them and sell them multiple products to be successful. It's really hard to do that.
Yeah, it's interesting. You mentioned there's multiple things that are hard about it. One is selling, two is continuously innovating. And I think for also back to your previous question, it's hard to implement technology that people are going to use. I've spoken with many firms, that's what I do for a living, but brokerage firms in particular, large, small, and they all say, "Oh, we have the best tech." And then when you get under the hood, it is not. And there's some platforms to maybe help facilitate things, but it's not easy to get a piece of software to do what it is that you want or need it to do. So that's a hard part about it.
Yeah, I think
Uh,
that's probably my least favorite part of real estate is there's some real chest thumping because it's such a competitive field and it's returns driven and you have to impress your investors and you have to impress your clients and stuff. I don't feel people are always real about their problems. Everyone's always doing the best they've ever done. Everyone's always at the top. And I think that's one thing where I wish people were a little bit more open. I know every business is hard to build and it requires endurance and greatness, and not everything came to them in the third grade and they were a genius. So I think that's one thing I'm not a big fan of in the real estate industry so far.
but isn't that just business in general?
I think there's some truth maybe that, but I think at least so I come out of tech and I think people are much more open and direct about things that aren't working and didn't work. There's always chest thumping in every industry to show it, but if you sit somebody down, they're saying like, "No, yeah, these are the five fires we have. I think we'll make it. We should be fine, but it sucks." And I think to your point with the brokerages, like everybody in real estate has the latest, greatest, best thing. And all they did was buy something from Microsoft and call it like, and no one's using it. It's shoved in the corner and they're paying like 50 grand a year. And they're like, oh, this was cheaper than everything we could have built. And we get to check that box and we have proprietary data or whatever it is. And so,
Right.
and as in my self-interested way, I guess what I'm saying is I'm disappointed when people think they've got the tech figured out, that sometimes they're like, oh, we already built something. And I'm like, you don't even know what you're missing, buddy. Come and take a look.
Yeah. Where do you want to take Canopy? What's your plan?
I would love to be in charge of Canopy for the rest of my life. One thing I've learned from my colleagues is everybody thinks that their second startup is going to be so much better than their first startup. Okay. And I have many friends, they're crying, wiping their tears with their $100 bills, that they can't come up with a second startup idea. Nothing seems good enough, right? And so much of coming up with an idea is irrationally believing you can do it and believing that you can execute it when you don't know all the challenges. But once you lose that glaze and you've done a company and you saw what it took to get to your first dollar and then your $100,000 and then your millionth dollar and then your 10 millionth dollar, you're like, man, if I knew how hard it was, I probably wouldn't have done it. Like, you can definitely really take a mental and physical toll on yourself. And I would say the company is the best it's ever been, but it's also the hardest it's ever been. And something I've heard from my mentors is that it doesn't get easier, you get better. And I think for me, I love running a company. I love the industry we're in. I think there's a lot of great things to be done still in this industry. And I think we have a lot of tailwinds to chase. So I'd love to keep doing what I'm doing and do it in a meaningful way. And my dream is that Canopy is used not only to operate buildings to help finance them. I know it's crazy, but if we have all your metrics, every single one, and we can tell you exactly how you're doing and we can predict it, why can't I give you a underwritten interest rate on that? Why can't I do a fund of funds and allocate money to who I think are the best operators, right? And
Hmm.
I think that there's some like crazy stuff you can do if you have the power of the data. And people are just like, oh, I'm going to sell this software app and it's going to do all this cool stuff. I'm like, yes, I'm going to do all that. But man, I want to bring like real estate is a capital business. And if you're not intertwined with the capital in one way or another, like I think you're missing the bigger picture. And so brokers, like you guys meet the biggest capital allocators and they are working with even bigger capital allocators and like you're part of the action, right? And I think being part of the action is part of being real estate. So that's just my 2 cents.
Hmm. So, last question, aside from how do people get in touch with you, how do you, given that you want to run this the rest of your life, and honestly, I feel like you're capable of doing that unless somebody puts billions of dollars in front of you. And even then, maybe you'll say no thanks. But how do you plan to stay ahead of the rapidly changing landscape?
I think some other really practical advice I've given, and it's always hard to follow, is focus on your own company, right? Like you're always going to have competitors. They're always going to be moving faster, smarter, and whatever than you. And you have to beat them. There's no question about that. But you don't beat them by doing what they're doing in their wake, right? You do it by doing your own thing better. And so stay close to your customers, stay close to your investors, stay close to your employees, focus on the things that you can control and I think we do a good job, and sometimes we don't. And I apologize to our customers and ask them how we can do better, and I try to make it better. And I think if you constantly do 1% better every day, you build something really meaningful. And I hope to continue doing that. But I would not mind a vacation once in a while. I will say that much.
Yeah.
We're not quite at the place as a business where I can take a month off. That would be amazing, but I hope that we get there in a couple of years.
You will. I have confidence. I guess actually before I ask you how to get in touch with you, who would you say your ideal customer profile is?
If you are a property manager, owner, or owner operator with 1 to 25,000 units and you care about operations and you think you can do a better job and you want to really invest in that and that's something that's important to you, call me. I really think that we built something differentiated. Like every customer we sign up, we say, here's your data today and here's where we think it's going to be. And we can even tell you how you've done historically. And I think we really drive value in a way that's meaningful by doing things that matter. And to me, that's exciting. And if that's exciting to you, give a shout out to your boy Sunny.
Shout out to Sunny. Um, I keep coming up with more questions. Have you gone to meetup groups with some of these masterminds or conferences and said, "Hey, here's what we're doing," or have you found that to not be a fruitful endeavor?
I will say this to every aspiring prop tech entrepreneur out there. Buy one of those credit cards that gets you extra miles because you're going to be on a plane a lot. So I think really valuable. The mastermind groups, I think those are really valuable for the right segment. But for us, it's really going to conferences. So we went to like 15 plus conferences last year. We go to our customers' internal conferences. Like property managers have a budget boot camp. They have these like different like vendor days and stuff. Go to those. NMHC has OpTech. They have the annual meeting. Go to those. Blueprint, which is like the tech and VC thing, go to that, right? Go where your customers are. And real estate people love to shake hands, as I'm sure Stash, who's shaking a lot of
Yeah.
hands, I'm sure.
Yeah.
Playing a lot. I can't tell if you play golf or not, but those things I say you have to go do them. But the thing is, people I think do two things that I'll give some pro tips here. Prime my future competitors here is come with a plan. We book like 30, 40, 50 meetings, whatever we can, like 1 month before the event starts. Okay. And the other is that it's not always about just closing business on the spot. A lot of times it's about building a relationship, having a long-term view.
Absolutely.
And, yeah, and I think you know that, but as a tech person, I did not appreciate that until
Mm.
I've been here.
Especially in real estate. Like I remember talking to somebody, I mailed this particular prospect for 2, 3 years, almost every month. And when he finally met with the guy, he had a stack of all of the letters and with the business cards, it was like 15 deep. And he finally got the meeting. So that's what it's persistence.
Yeah. And as a person who enjoys instant gratification, sometimes that can be frustrating, but it is the way
Welcome to
this
real
business
estate.
operates. Yeah,
Yeah.
exactly. Be ready for it. And yeah, yeah, I would say go to a lot of trade shows. Do you go to any yourself, Stash?
I'm gonna go to one over in, so I go as a broker, I go to NMHC and I had a couple of good meetings there, but obviously for brokerage, but also for Needle. I'm curious your thoughts on the Blueprint conference because they're talking to us and trying to measure ROI, things like that. I think your advice of book a bunch of meetings, treat it just like it's NMHC is a really good idea.
I think Blueprint's awesome. I think Blueprint is a really a capital event though. So one thing is that everybody in prop tech is in there. If you are on the like VC or you're a CEO or like you're those are like the two primary people that show up there. It's the place to be. It's our kind of Coachella, but less
Mm,
fun. I'll be honest with you. It's definitely not as fun as something like that. But don't get the wrong idea, anybody. There's not. It's not like that. But I think if you're in the market for capital and it's the place to be, like I think we probably had 25 investor meetings there and people invested after they met with us. That was just the thing that happened. And so and the other thing too is like, once again, with VC, it's very similar to real estate. It's like a long cycle. So being present there is really valuable. But I will say this, they do a good job of trying to bring a couple of companies. We've had some prospects come up, but it's not really a sell your product conference, although it can
yeah.
happen. I would say it's good to have a startup kiosk or a booth if you're trying to do sales, but in general, it's just not as heavy. Like we had a public REIT CTO come up to us and start talking to us because he's like, "Oh, I had never heard of you, and you do analytics. I just want to talk to you." And we're still in touch today, so
Yeah.
hey, that kind of stuff happens too.
Yeah, that's what I was thinking. It's just, I don't need a booth. I don't want to be tied down. I want to be able to float and talk to people. So that's good to know. Awesome. Sonny, you're the man. I wish you the most success in the world, and I really appreciate your time. So thanks for joining me today.
Yeah,
Um,
and I appreciate you having me today. And you've got a great podcast, and you've had some cool people on it. So I'm glad to have
Thank
joined
you.
alumni of that. Can I say share my contact info? You had asked about it
Yeah,
earlier.
that was my next question.
All right. So you can reach me. I'm a very hyper online person. You can find me on LinkedIn for Sunny Juneja. I've got a little green emoji of a leaf in front of my name if you're looking for me there. But the easiest way to reach me is email sunny, like it's a sunny day, at canopyanalytics.com, SUNY at canopyanalytics.com. And I'm sure Stash is going to post my something, so it should be pretty easy to find and spell.
I will. Absolutely. Again, thank you so much, and I hope you have a great rest of your day.
You too, man. Thanks for having me.
All right. Bye.